Most small business owners are leaving thousands of dollars on the table every single year simply because they do not know what they're legally allowed to write off. I'm Michelle Valbrun. I'm a certified public accountant, and I'm walking you through the write offs that actually move the needle, the ones I see business owners miss often, plus a list of everyday expenses that quietly add up to real savings. And everything in this video is fully legal, fully legitimate, and something you can start using right away. So let's go ahead and get into it. All right. So the basic rule behind every single write-off. So before we get into this list, you need to understand the rule that the IRS uses to decide whether something counts as a write-off in the first place. All right. And the expense has to be considered ordinary and necessary for your business. Ordinary means it is common and accepted in your line of work. Necessary means it is helpful and appropriate for running your business. So it does not have to be something you absolutely cannot survive without, just something that makes sense for what you do. All right. So keep that test in your head as we go through this list because it is going to be the filter for almost everything we are about to cover in this video. And the first one I want to go over is something that you're already spending money on that you could take advantage of, and that's going to be the home office deduction. All right. So if you work from home, even part-time, this is probably one of the biggest deductions sitting right in front of you and completely unused by many business owners. So to be able to qualify for this, you need a space in your home you use on a regular basis and exclusive for your business, right? The second word matters. A desk in the corner of your living room that your kids also use for homework generally does not qualify for this. A spare bedroom converted into a dedicated office, it does. And you have two ways to be able to calculate this deduction. The simple method is probably going to be the easiest way. So you multiply your office square footage up to a maximum of 300 square feet by $5 per square foot. So if your home office is 200 square feet, that is 200 times 5, which equals $1,000 deduction. The maximum possible deduction under this method, even with larger office, so 1,500. So the actual expense method takes more work, but it can produce a larger deduction for you. You can actually calculate what the percentage of your home is, and then also the square footage of what your office space takes up. Then apply that percentage to your actual home expenses and things like rent or mortgage interest, utilities, homeowners insurance, and repairs. So here's an example. Say your home office is 200 square feet and your entire home is 2,000 square feet. That makes up 10% of your home. If your total mortgage interest, utilities, insurance for the year adds up to $24,000, you would be able to deduct 10% of that, which is 2,400. In this case, the actual expense method beats $1,500 cap of the simplified method by a wide margin. One important limit either way is that the home office deduction generally cannot create a loss. All right. So if your deduction would push your business into negative territory, the excess carries forward to the next year instead of completely being lost, which is one of the positive things about this deduction. All right. So the next one is probably going to be one of the most overlooked deductions I see, and it's a big one. So if you are self-employed and you are not eligible for health coverage through an employer, including through your spouse's job, you could be able to deduct 100% of the health insurance premiums you pay for yourself, your spouse, and your dependents. And that includes health insurance, that's going to include dental insurance, even long term care insurance premiums within certain limits. And here is what makes this deduction especially valuable. It is not subject to the 7.5% of income threshold that applies to personal medical expense deduction. So you're able to get the full premium amount dollar for dollar as long as it does not exceed your business's net profit for the year. So let's say, for instance, you're paying $8,000 a year in health insurance premiums out of pocket, and you've been ignoring this deduction. That is potentially thousands of dollars in savings you have been leaving unclaimed. So you want to make sure you go ahead and begin taking advantage of this. let's talk about the next one, which is going to be retirement contributions. All right. So this is often the largest deduction available to profitable business owners, and it has added the bonus of building your own retirement savings at the same time. So there's actually two main options worth knowing, especially for the current year, right? So you have what's called the SEP IRA, lets you contribute up to 25% of your net self-employment income with a maximum contribution of $72,000 for 2026. It is a simple setup and a strong option if you do not plan to add employees to your business. The next one's going to be a solo 401k, right? And lets you contribute in two ways at once, right? As the employee, you could defer up to $24,500 in 2026. As the employer, you can actually contribute up to 25% of your compensation on top of that. So if you are 50 or older, you can actually add a catch-up contribution of $8,000. This often allows a higher total contribution than a SEP IRA at the same income level, plus some solo 401k plans offer a Roth option. So let's walk through a quick example. So say your business nets $150,000 in profit this year. A solo 401k contribution in the range of $35,000 to $40,000 is realistic for many small business owners at that income level once you combine the employee and the employer pieces. So at a 24% tax bracket, a $35,000 contribution could save you around $8,400 in current year tax while building real retirement savings that stays entirely yours. And these contributions reduce your taxable income directly, dollar for dollar, which makes this probably one of the most powerful tools available to a profitable business owner. All right, let's talk about how to be able to cut your self-employment tax in half. All right, so this deduction is something that almost nobody thinks about because it feels like it should not exist, right? Because it absolutely does. So you already know self-employment tax is going to be 15.3%. So here is the relief valve built into the tax system, right? You get to deduct half of whatever your self-employment tax you pay directly on your personal tax return. So why does this exist? Because a regular employee's employer pays half of their Social Security and Medicare tax automatically, and that employer paid half is never taxed as income to the employee. So since you are both the employee and the employer, when you're self-employed, the IRS lets you deduct the same employer equivalent half to keep things about the same. All right. So on $100,000 of net self-employment income, your self-employment tax comes out to a little bit over 14,000. So you would deduct $7,000 on that half in total, directly reducing your taxable income. All right, so let's talk about the QBI deduction, right? So this one is big, and a lot of business owners either do not know it exists or do not realize it applies to them. All right, so the qualified business income deduction, sometimes called Section 199A deduction, lets many self-employed people pass through business owners deduct up to 20% of their qualified business income. So let's say on $100,000 of qualified business profit, that is a potential $20,000 deduction straight off taxable income before you even calculate your tax bill. So starting with 2026 tax year, there's also a new minimum QBI deduction of $400 for qualifying taxpayers who have at least $1,000 of qualified business income, which helps smaller, lower income business owners get at least some benefit from this deduction, even in a slower year. All right. And this deduction has income limits and special rules for certain service-based businesses. So it's worth confirming with your CPA exactly how it applies to your specific situation and your income level. All right, let's talk next about business meals. All right, so business meals are 50% deductible when you are discussing business with a client, a customer, a business associate. That temporary rule of a few years back that allowed you to be able to do 100% deduction on restaurants meals unfortunately has expired. So we're not back to the standard 50% rule now. All right. And that rule to plan around going forward. All right. So to support this deduction, you want to make sure that you're keeping your receipts. You want to note who attended, what business was discussed, and the date. And a pile of restaurant receipts with no notes attached is exactly the kind of documentation that falls apart if the IRS ever asks a question. So you want to make sure that you have the right notes, and you want to make sure you keep those details with you, right? So let's talk about the everyday expenses people forget, all right? So beyond the big ticket items, there's a long list of smaller everyday expenses that quietly add up over a full year, all right? So let's run through some, all right? So we have software subscriptions, right? A typical small business spends around $2,000 to $5,000 a year on software. So things like accounting tools, things like scheduling apps, design softwares, email platforms, all of them are going to be deductible for you. Phone and internet, the business use portion of your phone and internet bill is going to be deductible for you. So if your phone bill is $100 a month and you use it 60% for your business, that is $720 a year that you're able to take just from one bill. All right, professional fees, payments to your accountant, your bookkeeper, your attorney for your business matters are going to be fully deductible for you. Business insurance, general liability insurance, professional liability insurance, and business property insurance are all deductible as business expenses. Also, bank and payment processing fees. You have monthly business account fees and percentages on Stripe, PayPal, Square takes out every transaction. All of those are going to be deductible for you. Advertising and marketing, money spent promoting your business from social media ads to printed business cards count as well. Education and training. So when you're spending money and investing money in courses and workshops, certifications that maintain or improve your skills for your current business, they're all going to be deductible for you. One important distinction to keep in mind here is education that qualifies you for a brand new career generally does not count. All right. So a bookkeeper taking an advanced QuickBooks course is going to be deductible, right? That same bookkeeper enrolling in law school to become an attorney is not going to be deductible because that prepares them for an entirely different profession. All right, so you want to keep that in mind when it comes to being able to understand exactly what you're able to deduct for your business. And if you're looking to be able to learn more about that and how to be able to do that, I recommend checking out this next video here to be able to do that. Take care.